Hello and a warm welcome to Personal Finance. I'm Gugulethu Cele. We're still coming to you from the Discovery Financial Planning Summit for 2015 from the Sandton Convention Centre in Johannesburg. Well, we're going to unpack a very exciting topic now, understanding and gaining the true value from your financial advisor. What you need to look for in that relationship, how to maintain it, and how to make sure that you as the client are prepared to continue to stay committed to this long-term relationship. Joining me now to delve further into this matter, I'm joined by Avi Kay, who's a certified financial planner with Discovery, as well as Justin Gilmour, the MD of Integro Private Financial Consulting. Gentlemen, thank you so much for joining us today.
You're welcome.
Let's talk financial planning and financial advisors. The big question for everyone out there who needs some help with understanding their money is finding the right person. Do you always need to necessarily start off with an individual who is accredited and registered with the necessary bodies in their country? Avi, let's start off with you.
I suppose the simple answer to that is yes. You really want to go to somebody who's qualified.
Why not my best friend who earns a lot of money and seems to be money savvy?
I think there's two issues there. The first issue is that your friend might be very healthy and really look after themselves, but they're not a qualified doctor. And you wouldn't go to them. You might get a few tips, but if you were not well, you wouldn't go to them. So too, someone who's done well and has really looked after their own money might not be trained and have the expertise to give you similar advice. It might have worked for them, but doesn't necessarily work for everybody, number one. And number two, there are certain accreditations, certain bodies, and certain themes that you need to stick within in order to give advice. So that person really needs to be someone who's trained and qualified and got the correct credentials to give that advice. So therefore, you need to find someone who's got the right association, the right qualifications in order to give it. So that's where you start. You make sure that the person is the correctly qualified person.
Shall I say Dr. Money, Justin? I take it you agree, obviously, with Avi's
I do agree with Avi. I think that it's dangerous in terms of to take advice just from someone who's done well financially for themselves. It doesn't necessarily mean your circumstances are your circumstances, and the strategy and the advice should be structured around your circumstances, not anyone else's. Your goals and objectives are unique to you. It's not a mainstream.
Mm-hmm. Now you find this individual who is accredited and listed with the necessary bodies. In our first sitting, in our first meeting, Justin, what should I firstly as a client be looking for to ensure that this is that relationship that I want to be in for the long haul?
Sure, I would think that you should ask, who do they represent? Is the advice impartial? Are they aligned to a particular product? And also, if that person takes the time to actually understand your goals and your objectives.
Avi, you agree, but I'm worried as you as the financial advisor, how do you ensure that I as the client am actually prepared to walk this journey? Because if I'm not in it for the long term or in it to understand and improve my financial well-being, then it's almost a waste of your time.
Absolutely, but you'll never know until you have that first meeting. And I agree with Justin, but just to maybe embellish a little bit on that, there needs to be a chemistry between the two people, between the financial advisor and the client, and you need to both be comfortable with each other, because ultimately it's a partnership. The financial advisor is giving the advice, it has the infrastructure in order to carry that advice forward, but the client needs to be comfortable with the person that they're dealing with. And maybe it comes back to the earlier question, does the person need to be qualified? Yes, to a point. You don't necessarily need to have the most unbelievably qualified person. You need to have somebody that you can relate to, someone who's giving you good advice and you feel comfortable with the advice that you're getting, someone you can pick up the phone, someone you can have a meeting, someone who's accessible. So that's really also what's very, very important, is that there's a free flow between the two people, that you feel that this person actually cares. They don't call me every day, they don't drive me nuts every couple of weeks to sell me something else. But when something important happens, I'm aware of it, and most importantly, when I as the client need them, they're available to me within a short period of time.
Communication and trust?
And someone also that is genuinely interested in your outcome. Critical.
I want us to explore the cost and the fees that might be the implications to seeking this kind of advice, especially in the South African market, Avi, where things are changing with the RDRs potentially being put into legislation. That's something that clients need to obviously have a mind shift change with regard to. Is it going to be an easy journey?
No journey is easy, and especially in South Africa, no change is easy. But one thing as South Africans, we are very resilient. we accept change, we know it's a constant, and we accept it and we go forward. However, I don't think the change is going to happen too quickly. It's going to be more progressive. But most importantly is that in the last couple of years, all the fees have been disclosed. Now when you get your quote, you'll see exactly what a financial planner is earning. You'll see what the costs are to the company, to the investment product that you're buying. So it's all transparent, and all that's going to happen going forward is it's going to be a different way of being remunerated. So right now, South Africans are used to paying fees. They are what they are. They've come down dramatically over the last while. They also don't go on forever like they used to. If you bought a 20-year product and you bailed out in year 19, you got hit with a penalty. That doesn't really happen that much anymore. But most importantly, everything is transparent. So as the game changes in the way the costs are structured, people will be aware, and they'll just be aware of that, and they'll absorb it going forward.
Justin, from our earlier conversation as well about moving to this fee-based model, you alluded to some lessons that we can learn from the Australian market where this has also come into play.
Yeah, look, I think that it's. I think overall, like the transition into a fee-for-service model was a valuable one for Australia. I think that it really positioned that the advice was strategic advice first, and the product was the end result of that to support the strategy. Nothing else. I think it also you got to a deeper level with your client and created a greater level of trust with the client, and hence we probably did more business as a result of the structure because you're on their side. It's a completely different conversation.
Would it ever be advisable to have more than one financial advisor?
Definitely not.
Tell us why.
No. Look, I think that if you're seeing an advisor that's providing holistic advice and working with your other professional advisors, i.e. your accountant, your lender, your legal advisor, then it's far easier, and I guess it's also everyone should be across your client situation. So it's a very powerful model, and really no need for them to go anywhere else. You've got all bases covered.
I want us to talk about the management and how to monitor this relationship. Does this mean that we need to have, like you alluded to earlier on, common meetings that take place quite often, open and honest communication between both parties, and more importantly, how do you tell when things go wrong and you need to rein in that client like slightly closer and get them to understand that you're working towards their benefit, Andrew?
Sure.
Justin?
So in our situation in Australia, all our clients are on a service agreement. So we provide and obligated to provide those services throughout the year. At the end of the year, then we need to provide a fee disclosure statement. So it's critical for us. The client then knows exactly what they're paying for. But it's imperative that we not only meet those service standards, we actually exceed those service standards. So in terms of in those service agreements, we agree to a schedule in terms of how often we'd meet with what other professional advisors we would meet. So prior to the end of the financial year, we'd make sure that we're meeting with their accountant, so that then we're across for tax planning. So that's really important for the longevity of the relationship to keep on track. Also, at that review, it's really important not to be reviewing just the product, but making sure that they're on track to reach those objectives. So modelling would be done to make sure that yes, we're on track based on how their investments have performed, as they approach retirement, that they're on track to meet their objectives, and we track against that original financial plan.
In your opinion, Avi?
I agree with everything that's just been said, but in South Africa we also, you've got a client mandate, and that's exactly as you were saying, is that you map the way forward at the very beginning. How often are we going to meet? What is my responsibility as a financial planner to communicate with you on an ongoing basis? How often do you want to meet? And it's got to be realistic. If a client wants to meet every week, then it's a different sort of relationship.
Yeah.
But the most important thing is that the client feels looked after and supported. There's an infrastructure there in order to support the needs of the client. And maybe coming back to what you said before, is that you need to be able to charge fees in order to have that infrastructure. You can't create an infrastructure with nothing. So you need to be remunerated for the service that you're getting in order to make sure you have an infrastructure that has longevity in order to supply the services going forward on an ongoing basis. But most importantly, plan it out, meet with the client as per the mandate, or more often if necessary, but make sure that you're always available within reason and that the client feels looked after.
When would it be fair to terminate this kind of relationship? If at all, because clearly we always need financial advice.
So for us, I think it's really, if we can no longer add value to their client situation, and that would be the time that we would instigate terminating an agreement. I think by even doing that, it's what that creates in goodwill and trust as well, in terms of more referrals and things like that, is critical for the relationship. We certainly don't want to be in a position where we're having meetings for the sake of it and we're no longer adding value to a client situation. That's not what it's about.
You nodding, I'm nodding, I agree. I think the word adding, that phrase adding value is what it's all about. If we as professionals are no longer adding value, then we must surely are detracting value. And therefore it's best for the client therefore to form a relationship or a partnership with somebody else.
Value is the key word that the both of you have used, and that's how I want to close off this conversation. The three key areas that both client and advisor need to ensure that they adhere to ensure that there's value created for both of them in this relationship. Let's start with you, Justin.
So I think definitely transparency. So the client needs to feel comfortable really having an honest conversation about, what it is that they want, what it is that their goals and objectives. And a lot of the time, clients don't know what they want. They don't know what their timeframes are. They don't know what they want from a lifestyle perspective. So it's taking the time and having genuine empathy and interest in the client's outcome to make sure that they can that they meet those objectives.
Mm-hmm.
I agree there. So it's that, and it's also the communication. That there's, even though you've got everything set out and it's all written down and it's all mapped out, how's it communicated, and is there free communication? In other words, does it flow? Can the client sit down and say, look, I really don't understand, or I'm really not certain, or I'm uncomfortable, and it isn't a slight. It's more as an open statement to say, I need you to spend a little bit more time with me just to walk me through that. And I think that would be a very important second step. And maybe just to close off, it's really about working together and having that partnership. Are we adding value to each other? Am I as a financial advisor walking away from a meeting saying, I've added value to that person? And is that person walking away from the meeting feeling I'm more upskilled, I've got more knowledge, and I feel secure?
Sounds to me like we treat this like a marriage.
That's it.
We'll leave it on that note.
Great.
Thank you so much to both my guests for joining us today and unpacking the true value of a financial advisor and how that can benefit you in your journey to financial wellness. A big thank you to Avi Kay, who's a certified financial planner with Discovery, as well as Justin Gilmour, the MD of Integro Financial Planning Consultants based in Australia. Well, that's where we leave it for this edition of Personal Finance. Do be sure to join us again next time when we unpack your journey to financial wellness.